All right, let's see what's going on over here. What is going on? I'm confused by this. Alright. And I think I had it correct to begin with. The new day opening gap is over there. So if we're looking at a market maker sell model for sure, this would be first stage distribution, I think. So we have the DXY dollars going lower. The indices are going lower, except for, interesting. Except for the Dow is going higher. Now the DXY is going higher together with the indices. Where we have some news coming out right now. So here we had consolidation. I'll take off that. That didn't hold. It's going against order flow. Right now we have the, I'm still on this screen. Now we have DXY moving up and the indices moving down. And it looks like Nasdaq is not as low as the ES. And the Dow. Now, I'm not really, see, the Dow has gone below this low. That is 920. Well, the ES has definitely gone below the 920 low, which was higher than 845 by ES. Let's see, 920. Nasdaq has gone dramatically below the 920 low. I see. Okay, but let's go to the 1 minute, because maybe we'll see a little more clearly what the so we have NQ is not below 947, whereas the ES and Dow are both below 947. Does that mean we should expect NQ to go lower? We're coming in on let's go to the 4 hour here. So we've taken out intermediate term low, and also a weekly low. We took out the earlier London low. Took out a regular old swing low. We went through the new week opening gap. Now this is a regular trading hour gap of today. Yesterday we closed all the way up there, and today, where did we open? Let's pull up the regular trading hour. Let me just refine this. We opened at 640. Okay, so we have this really significant regular trading hour gap, which we, filled in. Well, I guess not filled in, but we have a lot of untraded space in the relative regular trading hours. Presumably, we're going to head back there. Now, if we're looking at the higher time frame here, let's go back to the weekly. So on the weekly, we put in this SIBI between 2 weeks ago and this week. I highly doubt we're going to go back up, to the 20,078 that we see over here this week. Highly unlikely. We're still in premium on this trading range. Let's go back to daily. Now on the daily, if we're looking at the daily, we could look at this leg here as the trading range, because we're already below here, so there's no point in looking at that. So on the daily, we're in discount because we're below equilibrium over here. So as we get closer to past the 10 o'clock, I would expect that we are sometime around 10, maybe 10:30, we're going to start curling back up and come back up to fill in some of the gap, the regular trading hour gap, and perhaps the new day opening gap up over there. But I would not think that we're going to go all the way above this 4-hour CIBI here, putting us back above 20,000. If anything, we'd probably come back up to rebalance part of this regular trading hour gap, maybe up to 50%. That would be, if we go back up over there, that would still be almost a 300-point move if we do go up to equilibrium of the regular trading hour gap. If we do that, that would give us a daily candle of, a big lower wick, which I don't know how likely that is. I mean, this is what the daily candle looks so far. We still have the whole day of trading. So, 7 hours left, I guess. But these are the regular trading hours. We certainly could perhaps move back up and have maybe something of a a doji candle with maybe a smaller body in the middle and wicks on both ends. That could be, like, if we were to come back up to the lower end of the regular trading hour gap. Let's go to the 1 hour. Actually, we just finishing up the 4 hours. Let's clean this up a little bit. If we close below the 4-hour BISI, which we'll know in 10 seconds. You can't see I'm pointing to the clock. It's cut out. Hadn't realized that was cut out. Yeah, okay, so I'm just going to take off those lines here because we have turned that BISI Sorry, let's go back to the daily. So I was saying that on the daily, we're in discount, coming close to optimal trade entry levels. Well, that would be another, between just a few points and 250 points or more. I think it would be hard to anticipate that we don't show some easy way, that we don't, curl around. So prior to the open, we had this consolidation. Then we had at the 9:30, 9:30 and 9:31, a bit of manipulation before just dropping like a stone. Right, so we had consolidation, manipulation, expansion, or distribution, consolidation. Let's see, how would this work here? If that's the manipulation leg, projection, we've come to 4 standard deviations and beyond. And if we would look at that on 2 minutes or 5 minutes, I don't know how you know what to look at it on, but on the 5 minute we've come down to 2.5. Guess it depends on, whoops. Let's look back at the SMT here. So earlier, I'm just trying to just pay more attention to SMTs. So we'd seen that going back a few minutes. Let's see, what was it? Yeah, let's say over here, right? All right, 55. Dow Jones was significantly lower than Nasdaq had been. This is ES. Let's see, 50. And ES was significantly lower. ES was making new lows below, while Nasdaq had not been making new lows. So my question was, is that an indication that Nasdaq is likely to keep going lower? And certainly this time it was, together with a having a bearish bias, which made sense just based on the overall bearish order flow. But DXY is kind of going down together with the indices, which, although could say that the indices are perhaps starting to curl back up. It's not clear yet. So Ideally, we would be seeing the DXY and the indices going in opposite directions. We're not seeing that. And my aim is to be trying to catch 20-point moves. Oh. In order for me to catch this as a, or even just a retracement where I would give myself 20 points, I would really want be looking for the following. Let's pull up my newly written out trading rules. So you'd want a price move of at least 50 points from original consolidation. I'll definitely have that if we call this original consolidation. It's 163.5 points. But even if we look at a lower time frame, I wouldn't enter based on 10-second chart. I would need to see that we have some kind of displacement away from key level here, which we've took out that bullish for value gap on the 4-hour. I wouldn't go short because we're so far into discount. It'd just be a guess. I mean, we could be going lower to just about anything. All right, that's enough for today. I'm going to study instead because this isn't something I would trade. I'm not trading today anyway. I'm just tape reading. Got to practice.